The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, the grain and oilseed trade on Thursday finished a little bit lower as the markets remain relatively quiet, waiting on some semblance of fresh news. Meantime, cattle, another strong day there, led by the feeders. Overall, what are we keeping an eye on in these markets as we work through this week? No WASDE report on Thursday due to the government shutdown, missing data, things like that. Let's take a look at these markets and talk about things. Joining us now here on the program, brought to you by John Deere Round Balers and John Deere Operations Center, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, hope all is well. Good to have you back with us here this week. And let's start there. Just feels like these markets kind of chop it around a bit, looking for fresh news. I guess I should say to you, happy WASDE Day that wasn't a WASDE Day on Thursday, Brian.
Yeah, happy WASDE Day. Well, let's start with the grains on the big picture. You're just seeing a lot of field activity right now. There isn't anybody that's not busy, except we've been rained out a little bit. But even at that, farmers are getting at it. So harvest is really moving along. We're hearing that from a lot of farmers that corn's dried down really quickly, so they can get at that, trying to finish up beans or get at beans that might have been the later planted varieties, and those two are drying down quickly. So a lot of harvest pressure, a lot of big picture perspective on the market, trying to find news, to find direction, and the news is coming from people like me, and that's me talking to a lot of farmers. We don't have, like you say, WASDE. We don't have crop progress numbers. But things are moving along, and I'd venture to say that if we go back to the last progress report, we saw that bean harvest was, I think it was 19 or 20%. But you got to figure with this dry weather and these good days that farmers are probably in that 3 to 5% harvested per day category. So fast forward 10 days, you're probably in that 65, 70% harvested on beans, maybe stronger. Corn probably approaching that 35 to 40% level, maybe higher. So big picture is good harvest pressure. Markets don't have a lot of news, trying to find direction. The bulls are going to argue that, look, the market's bending a little bit, but you've got uncertainty with trade. You've got harvest pressure. You've got a government shutdown and prices aren't dropping. The bears are going to argue, well, it's just a matter of time for harvest pressure eventually exerts itself and you get one more push lower. So then you start looking at the charts, and the corn chart really, corn is a boring market in the sense that where it's trading today, it was trading at the same price at the end of August. So it's just the same. And you can say the same for soybeans. Corn does, from my perspective, it's got a chart formation that the bears might have a little bit of fodder here. That's the right shoulder of an invert or of a head and shoulders formation. That could point to maybe around that 405, 410 area in December. Yet the bulls are arguing you're forming the right shoulder of a larger inverted head and shoulders, which points to about the 470 area. So even the technicals are countering each other. I said a lot. I'll pause and let you go on with the question.
Oh, and I'm glad you brought up some of the technical chart things you're watching here, because that's what I want to ask you. When we don't have all of this data and this news and all these things that a lot of folks in the trade rely on for market direction, and algorithmic trade relies on, et cetera, et cetera. So what are things that we can look at to try and help us at least understand the position of some of these grain markets right now? Are they bullish, bearish, neutral? Are we seeing any activity under the surface here? Are the charts telling us any of that? I mean, what are some fundamentals that we can fall back on here, so to speak?
So I think the fundamentals, let's start with those. So fundamentals, again, just in case somebody doesn't know, that's the term that we use for supply and demand. So things that affect supply and demand, such as is the crop yield higher or lower than what was expected, or is the weather affecting crop harvest or slowing things. So those are fundamental factors, supply and demand. Technical factors are the chart, things on the corn chart. So there are people who they call people who trade markets. Some use fundamentals only. Some use technicals only. I like to use a combination of both. The fundamentals set the tone for kind of the big picture perspective and given supply, where's price been historically? Is it overvalued, undervalued? And then on the technicals, is the market running into something that's called resistance? That is, prices just can't get through a level. And that's really what you're seeing in the soybean market here the last 4 or 5 days. It's what you saw in the corn market. You're running into some overhead technical resistance in the form of moving averages, a correction. The market retraced a certain level. And now we're just going sideways, which the more you go sideways, the likelier, the quicker and faster the breakout. When prices decide to go up or down, it's going to be a little bit quicker and harder. So the message would be prepared, right? Don't feel, I would not be blindly bullish or bearish here, but if prices look like they're breaking support and I know I need to sell, I'm probably selling pretty quick. If prices break resistance, if I'm a feed buyer, I'm probably buying a little more aggressively. If I'm a seller of grain, I might just hold off once that resistance is broken. So I know it's again wordy, but it gives a good picture of what I think the technicals help us decide the when. The fundamentals are the supply and demand, which give us the price levels.
What about the cash market? That piece of the equation here. I've noticed basis has improved in a few areas, mainly the east and along the Mississippi River, for instance. I mean, what can folks take away or infer from looking at basis right now, Brian?
Good question. So typically, if basis improves, it's a sign of one of two things usually. One, either a lack of farmer selling. They're just not interested in selling at this price. So uh, you got to flavor the pot a little bit. You got to give them a little sugar. Well, how do you give a producer a sugar? Well, the buyers out there that are buying, they're saying, you know what, I know I need to push this a little bit harder to get this corn. I want to secure it. So it can be a sign that demand is picking up. And with the export pace the way it has been in corn, and currently the price that's in corn is not. Let's just be real about this. Even at corn on the board at fourth, that's not a great price for corn. Nobody wants to give it away. Take a basis off of there. So cash is going to have to do some heavy lifting to get farmers to get a trigger point. And so for producers, stay in contact with the elevators and be vigilant, because what they might get is they might get flash bids. And to me, what that means is, let's say Brian Doherty runs a large dairy, and I just decide, you know what, I think corn's cheap enough. I want to book 200,000 bushels of corn and just have it. And so the elevator says, okay, we'll sell you 200,000 bushels of corn. But they don't have it bought yet, right? So they say, we got to get it from our farmers. So they raise the bid 5 cents, or they got their list of farmers. They're going to go down first and say, hey, I can give you 5 cents better. I know you've been looking. Uh, let's take it. Does that interest you? Or 10 cents better? So that would be number one, is stay in good contact with the buyers. And then on the big picture, just watch the big news here. How are yields moving? I would tell you that the feedback I've gotten so far is that there are a lot of farmers who are saying this, and I might have mentioned this last week, that hey, I don't want to complain, but, and the but part is, my yields are 230, but we were looking for 260, or they're 200, and we're kind of banking on this 225, 230 for whatever reason, rust, whatever, dry weather, smoke. A lot of corn just doesn't have quite the yield that it looked like it was going to in late July and early August.
We are having a conversation today with Brian Doherty, Senior Market Advisor with Total Farm Marketing here on Market Talk, brought to you by John Deere. Let's go to livestock, Brian. Cattle, fourth day in a row to the upside in futures here this week, and feeders leading the way. It really doesn't seem like there's any overhead resistance right now in this feeder complex, and it's kind of driving the bus this week. Would you agree? What are you seeing in the cattle trade right now?
It is absolutely driving the bus. The auction barns are active. The idea of tight supply and continued good consumer demand. We've talked for a long time. Well, is it consumer demand or what's driving it? And it just, I was watching a show on television, and I'm sorry I can't remember which channel or which network, but the people on there caught my attention because I heard him saying in the background, younger men in particular, but there's a push for proteins. Proteins are in. And so you think about people who can afford beef or people who want to afford beef. I don't think the price is stopping them, whether they pay $34 for a filet or 26, they're buying the filet when they go out. That's it. So I think there's a good part of that. And those who couldn't afford beef before probably are buying it anyway. But I still think it's the perception nature in the marketplace that, look, this droughty condition out west was 10 years ago and 8 years ago and 6 years ago and 5 years ago, and the herd was contracting and the cow calf producer is getting older, and all of a sudden all this is coming home to roost in a time of good demand.
Well, and to that point, being bullish on beef demand here a bit and seeing that continue even at record high prices. And some, have talked about it. And I know I've talked about it, several months ago. It's okay. When are we going to see that trade down, so to speak, to pork, to chicken, to turkey, you name it? But we haven't really seen that. And I mean, credit to the other sectors of the proteins here. They're doing a lot of promoting and marketing and things of that nature. And people are out there buying those different proteins and different cuts. But still, beef seems to continue to be king here at the grocery store and at restaurants, Brian.
It does. And when you take a look at the whole complex, right? You take a look at beef, and it just doesn't seem, the other side of that coin is, or the reality maybe is, or the growing reality is that the old saying is high prices cure high prices. They apparently haven't been high enough. They're not creating an incentive to grow the herd, and just the opposite. They're creating an incentive to get the bird in hand and cash in hand because we've never seen anything like this, and sell those heifers or sell those calves. And why do you want to invest in an animal that costs $3,200 to maybe get a payback in 2 years or 3 years? It's a hard investment right now to buy into. May make perfect sense, but that's where your strength is coming on those back months. If I look at the October live cattle contract, 235, Jesse was 235 on August 20th. It's now October 9th. It's been higher, it's been lower. That one's not moving. But when you look at the back months, when you look at June cattle, 238, back in August, it was 225, $13 pickup. The market is realizing that, well, two things. One, the way feeders are selling in auction barns, the break even is above those levels. So buying the board, or speculators buying the board, or just the idea that the board needs to go higher to keep these ranchers from losing their shirt, seems to be providing incentive right now. But it is then the technicals kick in. So we talked about technicals before. All of a sudden, 2 days ago, you slip back to the highs or break the highs, and then you get the short covering. That is people who hedge this thing, saying, I'm not sticking around. They put a stop in, they stop the risk. That means it's a buy order. So it's another buy in the marketplace, but it's what I call an unintended buy. It's a in case buy. So in case prices go higher, I want to get out of my short position. I think you're seeing that the last couple of days too.
Yeah, it's a good point. Let's go over and talk about the dairy complex. Give us your rundown of what is trending there this week, Brian.
I think if you looked in the dictionary and looked at the picture of a broken record, they'd show a picture of the dairy industry because it's a broken record. Um, more cows, more efficiency per cows, cheap grain, great prices for calves. Uh, the view is that there's little incentive to tell farmers prices haven't gotten, actually, I'm just be blunt, they haven't gotten low enough to tell them we got to stop this, right? So they're just at a level where they're making things work on different avenues and different ends. The milk marketing order changed, so we're still trying to get a grasp on how that affects or impacts farmers. But with higher quality milk, more fat in the milk, more components, you're creating an environment where you're pushing prices in. Let's look at the cheese and say, well, cheese right now would maybe make the argument that $17 can hold, but we're seeing the board having a tough time holding that level. Maybe the board's a little oversold. I would say it's consolidating, but what's disappointing is this last rally and this last punch higher that we had into last week hasn't held. And then even today, the market showed some life early on and reversed down, finished really poorly. So too much supply, not enough, let's say, end of year buying yet into the cheese, into the products to really scoop up the inventory. And frankly, I think the processors, for the moment, they don't have to chase the market. They've got plenty of incoming milk or inventory at the moment.
Excellent perspective as always, Brian. Final thoughts from you. What would you mention or reiterate to folks here on the show today?
Well, first of all, I would just like to say thank you for the opportunity, and then thank you to your watchers, listeners, that we know you're busy. So with that busy comes tiredness and all of that. So stay safe would be number one. That's just so paramount. Make sure you're just slowing down a little bit. Recently in my home state, we don't know the why, but there was a tragic accident between a large truck, silage truck or milk truck. I'm not sure which, but just slow down a little bit. The second thing is that, I've coined this phrase lately: marketing doesn't take a day off. So continue to look for those opportunities. Have the conversation with your elevators if you're grain. Look at your charts, look at your technicals. We just talked about the milk market as an example. Milk prices made a really nice recovery, nice correction percentage on the charts, ran into resistance at some key moving averages, and something I like to watch, the Bollinger Band, and that stopped prices. So the traders are selling those rallies where the charts are telling them to.
Brian, if folks want to reach out to you, have a conversation there at Total Farm Marketing, what's the best way to do that?
The best way is with a phone call, 800-334-9779. I'm happy to field emails, Brian with a Y, so BRYAN, at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Always a pleasure. Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us here on Market Talk, brought to you by John Deere. Have a great weekend. We'll talk to you next week.
Excellent. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.